I think there's two sides of that. One is is going to go back to the EOS that I mentioned, because you're gonna have your strategy, which defines the long-term vision, that 10-year, 3-year, 1-year plan. Everyone's aligned there, and your core values. And then the people side of things is basically, I like to define autonomy or dominance from 1 to 10 for simplicity. And 1, 2, or 3 would be someone very low autonomy. They like stability, for example. And then you have 8, 9, or 10s would be the crazy entrepreneurs, right? But 4, 5, 6, 7 is what I consider I call enough initiative, enough autonomy, which is someone that is good, brings idea, push you back, but they don't want to recreate the business totally. So they follow the vision, they add to that vision. So that's been the sweet spot for us.
I'm Brandon Reed, and you're listening to Ready, Set, Startup, a podcast that brings you industry-tested perspectives from leaders working in all areas of the startup lifecycle, so you can learn from the wisdom that they've gained over years in their fields of expertise and apply it in your own entrepreneurial journeys. Let's get into it. On today's show, I'm talking with Marcio Goncalves of WiseVAs. Every once in a while, I run across one of those founders who seems to be doing 11 different things at any given time. Someone who, when you talk about like a new helpful tool or something that you're using, says, oh yeah, we're building our own one of those. Marcio is one of those kinds of founders, always building, always creating, always stretching. As I work through my questions for him, you all get to be the beneficiaries of all of that hard-earned wisdom he's gone out and gathered in his many entrepreneurial endeavors. Our conversation weaves in and out of several of his companies, but he sticks to some very helpful and clearly defined through lines that have guided him on his journey no matter what he's building. There is a ton of insight packed into this interview, so listen closely for what you can apply to your lives and businesses. Marcio's approach of build all the things isn't new. From a young age, he was creating and even scaling revenue-generating opportunities with his friends and classmates, starting with, wait for it, hamsters.
So the story is that I was about 12 years old or so, and I started I bought hamsters on a pet store, and I figured out you can breed them and sell. I was selling hamster offspring for like $1 a hamster. So that's how it started. So that's animals. Always loved animals and entrepreneurship. And then had a few small businesses, like at the time there was one that never took off, but it was a DVD idea. People are going from like DVD to CD player or something like that, or old VHS to CDs, and I was like, hey, I can convert that. That never took off. I think the furthest I went on that one was just like business cards. Is how far. Like I was 16 at the time. And then we had a business. I was about 20 years old. That was kind of my first real business, where these auto traders where you can buy and sell cars. That's what we created at the time. It's been like 15 years ago. And in Brazil, where I'm from, that was not very popular. So it was good because it was good timing. I put some money in that. I didn't have a ton of money, but then someone had passed away in my family. I had a little bit of money. I put that money, and then I brought 2 other investors, which is funny. I always say that I'm not good at. I don't think I'm good, and I don't think I know about capital raising. I never done that, except at that time I did that.
Nice.
Which is funny. And so that's how we all got started.
Awesome. So that kind of first idea actually about, well, not your first one, but the one you kind of really sounds like gave a real shot at. You brought some money into it. You used some of your money. You had some skin in the game. Was that co-founded? Did you just do it on your own? Were those investors co-founders?
That one, they were silent investors, if you will. Actually, they were not working in the business. Trying to remember if we had anyone else. No, that was pretty much it. Yeah. Then we brought in. I brought in an operating partner, and he was going to get some equity. And then when we were about to be break even, we did a bunch of pivots. At the end of that business, we were selling leads.
Nice.
We went from auto trader to Google ads selling leads.
Okay.
And we're about to break even. And then my operating partner was like, man, this is too hard, whatever. So we fold on that one.
Okay. Okay. Awesome. So yeah, that was one of my questions. Is kind of early on as you were starting in entrepreneurship, were you feeling like you wanted to do the co-founding and partnering thing, or kind of solopreneur? And how did that? So I guess take your next step of after that business, you guys folded. Your operating partner said no. What'd you do next? Was that something? Did you jump out and go on your own? Did you decide to do partnership again?
The next one was a podcast that we launched in 2012. It's funny because not many people knew what a podcast
No.
was. Took me
Yeah.
6 months to find a guest. And the first episode, I had to do a monologue so I could send the link and say, this
Nice.
is what a
Yep.
podcast is. So that's funny. But man, that was alone as well. The story around partners is, I think over the years across different businesses, I've had over like 15 different partners.
Mm.
I get along with about 90% of them. There's one or two that's like, okay, it didn't work. But then we can talk later, but then it comes back around the whole idea around personality profiles that we can dive in later. But that's without knowing that, I was like trying to have the wrong people doing the wrong job, if you will, kind of pushing people in the wrong direction. And also on the partner side, what I was going to say, what I've learned is that partnering with inexperienced entrepreneurs or first-time entrepreneurs sometimes, especially if it's the wrong personality profile for what they're trying to achieve there, can be challenging. So my overall learning on this topic is I actually, with my personality, I actually try to avoid partners. Is I think where I am now. I think I'm going to evolve over time. So I went from partner with a lot of inexperience to like I run some companies that I own 100% now, and I have a few startups that I have partners, and that's working well. But they're more experienced, right personalities, so it's different lessons on that topic.
Yeah, for sure. That makes sense. When you did you ever work like a W-2 9 to 5, or you've always been creating your own stuff?
I did. So I worked as a waiter for
Okay.
3 years, and I worked after grad school, I worked for a large company for about 3 years as well. Travel around the
Okay.
globe was super fun, but that was it. Yeah.
Okay. Okay. So no, this question will be applicable. So you're doing that. You did the more normal thing. You were traveling, working. You were young, bigger company. When you jumped out and you said, "All right, entrepreneurship is the thing I'm gonna do," that feels like the right fit for me. Was it as you expected it to be? You know, you were doing things. You're 16. You had your DVDs and VHSs and conversions. But like, was it as you expected it to be, or were there surprises? And where were the gaps in your understanding of what true full-time entrepreneurship was going to look like?
I would say that in my experience, I think more pleasant surprises than unpleasant. And on the unpleasant side, for sure, is hard. I mean, heck, 2 years ago in our media company, I remember sitting on the kitchen with my wife. I was like, "Look, we might need to sell our house so we can live out of rent, so we can use the equity to keep the company alive." And I said, "Look, I really believe on this vehicle that we have, and I want this, and I know I can turn this around because the business is very nimble, et cetera, et cetera." So that was kind of the hard part, the hardest so far. And then on the pleasant side, the reason I believe everybody has a job is because that company is getting ROI on your time. So well, if you go on your own and you have the right skills and etc., you can get that ROI for yourself. So that's kind of the upside is crazy.
Yeah, no, for sure, for sure. What was the thing that you decide that you were going all in on when that moment came? When you were working in a normal job and you thought, all right, no, entrepreneurship is the right fit for me. What gave you that leap, or what business were you kind of investing in when you took that leap of faith?
When I left my job, right?
Mm-hmm. Mm-hmm.
It's funny that first year, which was 2019, 30% of my time I launched a podcast company again. The first one was Brazil.
Okay.
Second one was English in the US. And that was okay. Starting like 2 weeks in, we got like $500 a month, you know? But then at the same time, 70% of my energy was going to wholesaling, real estate
Hmm.
wholesaling, because 3-4 months before I left the job, I found a deal, got under contract,
Mm-hmm.
and I walked the house with an investor. Like 2 minutes into the house, he was like, "Yeah, I want this," and I was like, "Damn, I just made ten thousand
Nice. That was
dollars.
easy.
This is easy." So I was confident on my ability to generate money. I was like, "Okay." I left the job, and then
Okay.
I did the wholesaling for a year. We did about 20 deals, and then the pandemic hit,
Oh, nice.
and I'm like, okay, pandemic's gonna go south. The real estate, it didn't, but I decided to go to spend all 100% of my time on my
Mm,
digital side of things, which was the podcast, and that was good.
nice. Yeah. Nothing will give you confidence to leave your job like a quick and relatively easy deal, right? You're like, hey, I can do this. Yeah.
But on that note, on the other side of that, it's like it's so hard to leave a salary behind. I was making, I think, 9,000 a month net, so decent. And I was like, man, it feels like a drug. So it's super hard. I find so.
Yeah, no, it really, really is, and I mean that is, of course, one of the largest barriers I find that people to go into full time entrepreneurship is that that drug of when I was working for Disney, they called it this. It wasn't just related to salary, but they call it the Disney crack. It's like it's really tough to wean off the Disney crack. It's like everything's there's so many great things about working for Disney, and there's great things about working for larger companies if that's the kind of the cloth that you're cut from, and that can be really hard to leave for the uncertainty, even with the big upsides and opportunity of entrepreneurship. So let's kind of create some more shape for me about what ultimately the business was that you went and built. You do a lot of different things, but paint a picture for me of like what your core business is now. And I want to kind of go back to the beginning of that, and we can talk about how you built it and scaled it and what that looked like. But what are you doing now? What's the business that you're focused on?
Okay, I'll give a short summary on the current situation, and then we can expand on the background,
Cool.
like you said. So right now, 80% of my energy goes to the virtual assistant agency. That's 2 years old. I'm focusing on it for a year and a half now, doing really well, growing 10, 15% a month, which is kind of crazy. About seven people on that team, and then 10% of my time goes to the podcast company, about 30 people on that team, all remote. And then another 10% is my venture studio, which we have a software company there where we have a few different softwares for small business owners, operating system, personality profiles. And then we are about to launch, also linked to my previous life of veterinarian, to launch feed formulation software, very modern. A lot of stuff right now in the market is super old school, so that's kind of exciting. But then back in the day, what, 6 years ago, I guess, is what my first business for 5 years in a row, real business, I'd say, has been the US based podcast company.
Okay, awesome. And so that's been your main focus up until maybe more recently, the VA agency and stuff. You've been focused on that. Let's talk a little bit about. Well, you can choose which of those companies feels applicable for these questions, and you can even kind of dodge in and out of these businesses as you answer this. But when you were first getting started on any one of those, how did you first? To give some context, most of my listeners are entrepreneurs who are starting out, whether they are starting a company for another time, an additional company, or they're starting their first company for the first time. And there's a lot of like uncertainty and open questions as they get started. And one of those key things is like you can have the best idea in the world, best product in the world, but like distribution is king. And like, how do you get in front of people? How do you find that market fit? How do you begin to tell people that like, hey, I built something that's really cool? How did you do that early on? How did you find that fit? How did you find your customers, clients, etc.?
Two things there. First, as a business philosophy, and this is evolving over time. But when I look back 6 years ago, I have this philosophy, which is I I used to say this, and I'm changing now, but I used to say, look, I want to start a business that it doesn't take more than $100 to start and can generate 10,000, 20,000 net per month. That was kind of a small business. Let's say a small business, $100 here, 200K net per year would be kind of cool. So that's the frame I look at. I used to look at business opportunities. Now, more on the let's say on the the customer acquisition side that you were asking on that podcast, the way we acquire clients is via outbound outreach. So it takes one person, one full-time appointment setter or SDR can do 500 activities a week. That from there they can generate 3 to 5 meetings. It takes about 5 to 10 meetings to generate one deal. The average deal is $10,000. So from a customer acquisition standpoint, I love when you can transform into mathematics, right? You can. It's some very often it's very abstract how to get a client,
Mm-hmm.
And I'm not saying that we have the magic sauce. What I'm saying is that every different business has a different equation. Example, on the VA company, we are not there yet. We don't have
Mm.
that predictable acquisition channel. There, which are the niche of that business, the beginning, the first customers have been networking, business groups, and their referrals, and first, second, third generation referrals. Which in this other business we barely have any referrals because it's a very competitive industry. And finally, on the, let's say, this new feed formulation side of things that we're talking about, we are going to leverage the podcast event. So we are leveraging our current assets to launch a business, if that makes sense.
Yeah, that makes total sense. And so, tell me a little bit more about this. Like starting, it only costs $100 to start. What does that even look like? $100 doesn't even get you like an hour of people's time these days. It feels like. What did that look like? What did that framework look like? And why was that limitation like helpful for you as you thought about what do I do next?
The reason it was helpful is because I didn't have money.
Yeah,
So I'm like, okay,
yeah,
well,
yeah.
when I look at someone buying a manufacturer, and the other thing, I mean, if you're acquiring a business for 200,000 down, $1 million business, whatever, that's a different conversation. But if you
Hmm.
are creating from the ground up and you don't have a ton of money, look, service businesses, in my case, was a podcast, which, look, I was the host, and so it didn't cost anything. And then went out after clients, the way I mentioned, with emails, etc., finding marketing managers on LinkedIn, etc. So that was the $100 kind of idea.
Okay.
The VA side as well, because was kind of funny, because after building the first company, what I found is that because you have people and profit, ideally, it makes everything else so easy. Like, to launch the second company, we leverage our current resources, and we were able to launch the VA company again without barely any money, right?
Mm.
Now I said I'm changing a little bit because now I'm willing to invest more, if you will. Example, the software company, I think I'm spending, I mean, not that much, but it's like 3 to 4 thousand or so a month to get that off the ground. Or we have a few clients right now. We're probably at 70, $80 a month in revenue
Right.
on that one.
Right.
So, but it's a 5, 10 year plan, and I'm very bullish on it. So it's different model there. Yeah.
Yeah, totally different models. And I love how you say, like, listen, I'm constantly growing, constantly evolving my understanding of like one thing you believe is the right fit. That could either adapt more generally of like, oh, I was wrong about this holistically, or that was right for this business, but wrong for this business. And how you kind of adapt those things as you build different businesses is important to understand. You mentioned, you have that you were getting people. You mentioned something about as you go there, you have people and profit. That's how you framed it up. This people side is a really important question, I think, for early stage entrepreneurs, because that's a really intimidating or overwhelming moment to say, like, all right, I need more people if this is going to grow. Like, I am my own bottleneck. It's hard to slice the pie thinner, right? Like, especially if there's not much revenue early on. People are complicated and introduced issues into the business. And so it's really, really hard to do that. How do you find, in all these different things you've done, how do you find to best identify the moment in which that is the right time to bring people on? And how do you do that transition well?
Just as a intro to that question, is the VA business took me 2 years, again, a year and a half focused to get to the same revenue of the other business that is 6 years old. So that's kind of crazy, right? But because I think we got better at, again, the right people and operating systems. We can touch on that later. To focus on the question on the right timing. In the beginning, if you don't have any revenue, right? So let's say you're starting a service business from the ground up, you got some first clients, you are selling, you're fulfilling that product or service, and that's kind of how it goes. You're doing the invoices, and then as you get some revenue, you have to cut the pie, like you said, thinner,
Hmm.
and then you bring this. There's an order. So first thing would be admin and finance. Finance would be a part time. Admin. I mean, if I'm going back 6 years ago with a little bit of a profit, I'm going to find admin. I'm doing the sales, and someone else doing everything else, the operation side of things. Admin first, and then number two is operations, which is fulfilling the service or product, the delivery. And then number 3 is marketing, number 4 is sales, and the next one will be leadership. So that's kind of the easiest order to replace yourself out of the business, if that makes sense. But I do see, work with a lot of entrepreneurs in the VA business. I do see what you're saying. Like, a lot of people are a little bit, maybe the word is insecurity or something, or
Mm.
scared of hiring, making that decision. On that topic, man, some people procrastinate. Oh, I need to have everything documented before I bring someone. It's like, in my experience, and again, personality profiles are different there. But myself, it's like, I just bring someone in, and then we improve over time. Like, we work on the SOPs together. Or if I don't know anything about that, they work on the SOP. If I know, I do a few Zoom calls and stuff, record that, and say, like, that's it. So that's my style.
Yeah, no, that's really good, and that's a good perspective from someone who's built lots of different things for sure. Let's talk about in these early stages as you're building these businesses. Again, choose whichever one feels most applicable for this kind of question. But how are you differentiating yourself from other incumbents early on in your space? How are you creating your moat, making your product and service or service defensible? How are you really setting yourself apart as you come into a market, any market, that some are more competitive than others? But just about any market, unless you're doing something whole cloth new, is going to have people already there doing it, and that will be your competition. How are you setting yourself apart?
Man, that's an interesting one, because a long time ago, I used to think, yeah, for me to have a business, it has to be something completely new.
Yeah,
Well,
completely new. Yeah,
right. Turns out, no. If there's a
yeah,
profitable industry, I think the industry that you select, or the type
yeah.
of business that you select, is one of the most important things. So being on that ocean that is rising, let's say AI right
Uh-huh.
now, for example, is important. Our VA business is on a good industry, because
Hmm.
people is a challenge. So what we do is, for the VA business, we started very cheap to get the first clients. Look. I love the first transaction is the first dollar is the most important dollar in the business. A lot of people procrastinate that, in my opinion. And then what we did on that business is about $800 a month of VA, which is, today we charge $1,800 minimum. At that time, we were barely break even. We're probably losing money, but it's because we wanted the first 10 clients. So price is a big for us. It has been half, let's say half the price is how we get into the market, and then we increase from there. We're doing the same thing on the software side. We are coming in the market half the price. Well, and then you can say, look, but you guys are not innovating. Well, we are. We are doing some incremental innovation, but no, at this point, no radical innovation. We are doing a little bit of radical in the feed formulation software, but just because the current companies are super old school, like Windows 95 type of
Hmm.
design. So that's that. Yeah, that's that. And then on the podcast, I think we did. There was no that was one somewhat of a innovation. There was no other major podcast there. There was one or two, but nothing like we're doing. And the way to explain that is, what the way I approach is, and it goes back to personality, I think, and how we are wired. The way that I approach is more like, how can I explain this? It's more like Tetris. I look at something that works in one industry and I copy it to the other industry. So it's more of a Tetris innovation approach rather than crazy first principles approach. Maybe one day, but at this point, that's not how my brain operates. It's more like, I'm very broad and I'm like, oh, this is cool. Let's do this over here. And that's how I've been able to innovate.
Yeah, that's awesome. And I love how you keep going back to, this is what I know about me. This is what I know about this business. Here's how I adjust and implement and execute based on the unique nuances of this business, this market, me as a founder. I think that ability to be flexible is so key. What is continuing to kind of press on this building piece with your businesses? Identify one kind of big bet that you took. You started touching on one as you were around the kitchen island with your wife, saying like, "Hey, it might take the house." But like, what's one big bet you had to take building any of these businesses that really put it all on the line and felt like you gave you the opportunity to move things to the next level?
Yeah. So that kitchen conversation right before that, several months before that, I probably had saved up, I don't know, 300 or 400, 350K. in stocks and other things and some Bitcoin. And I started burning that savings to keep the business alive. And then I had about 100K equity in the house. Well, actually, it was 200K. 100 was a HELOC, and I had used half of that HELOC, 50K, to keep the business alive. And then I had about another 50 and another 100, and that's when the kitchen conversation came about.
Yeah.
So
You're like, I
that's
have
where I
this
put a
bit here, this bit here, this bit here. It's like, uh-oh, I have no more bits.
uh
Yeah.
to the point that a few months before that conversation, I put on the fridge. I wrote up everything. Like I put, okay, this is stocks, this is this is that, this is the house, and I would tell my wife, look, this is gone, this is gone, this is gone. Yeah. So, and I was working like crazy Saturdays and Sundays, 6 hours each day, if you will, there on the weekends. And I was doing the prospecting. I had a sales team, but I was
Mhm.
like something was super weird and crazy, and I was doing the work, the heavy lifting of the business. So yeah, that's where the biggest time that I put everything online, and
Mhm.
yeah, it's kind of crazy.
Yeah, it is crazy. That is speaking about adjusting to what works for you, your business, your that would not work in my family. Putting how like, hey, babe, look, this is gone. This is gone. She'd be like, I don't want to hear about any of that. That is so stressful. Oh man, that's crazy. Yeah, but if you guys both work like that, seeing like that can be really, really motivating. That's crazy, and I really resonate with that. Of like, all right, we went here and got this part. We went here and got this bit. We have these few things left, but like as soon as that's gone, what do we do? That's a tough place to be in. And again, one of those things about entrepreneurship that is high risk, high return. It's sometimes you got to put it all on the line. Let's kind of stay in this vein of building. Let's talk about scaling these. We've talked about a couple of your companies. You built it. You found your product market fit. Maybe you have some customer, some traction. You have some contracts in place. As you look to scale, what were some pivotal moments in any of those companies that you felt allowed for that hockey stick of like, hey, all right, things are cruising along. Maybe even we're getting into the black, like net positive, but the potential of this business is here in this bit. And like, how did you go get that and create that scale?
Right after that kitchen conversation, a few months after that, I had joined a group of entrepreneurs, and I learned two things that I tell every entrepreneur that I meet to date is that, and that those things changed my business, because February or so of 2023 was our worst time in the business, crazy, chaotic, wrong people in the team, and then from there it's been smooth sailing. And the things are, one is EOS, the Entrepreneurial Operating System, from the book Traction by Gino Wickman. And then more specifically, using a specific software to use that. We were using 90.io for a long time, big fan. Now
Mm,
we have our own software, but that's that. And then the other part is advanced personality profiling. So there's culture index, there's predictive index, and again, we're launching our own as well. So those two things, I'm so much of a fan that I'm like, okay, we got to now with AI and other things. Are like we're building our own. But for me, 80% of running a business are those two things. And man, now with the right team, weekly metrics, quarterly goals, annual planning, quarterly planning, well-defined org chart, uh, it's super smooth.
yeah, that's amazing. I love how one of the keys to your scale was like tightening up the structure of things, how like that can really be transformative, and how you were hitting a really low point. And I love how getting that insight of like, have you tried these things, have you done these things in your business, came from surrounding yourself with other people who have done it first and can share those things of like, hey, this transformed my business, it might help yours. And I love hearing that. As you scaled your companies and you kind of hit that low point, and then you're like, all right, no, here's opportunity, and you start identifying through structure and other things opportunities for growth in those businesses. Did you ever have to bring more funding to realize that scale, or have you been able to cash flow each one of your things you're doing?
On the philosophies of the venture studio, for example, which apply for the other companies in general, is B2B focus. So we try to focus on B2B
Mm,
companies is one thing. The second thing is profitable growth, so bootstrapping. And I go back and forth like every 2 weeks I ask ChatGPT, give me the pros and cons of having investors. See, you know, because I'm like, maybe one day, because what I think is like, what the big people do, like say Elon Musk, what does he do? Well, he raises money.
Mhm.
And I'm like, okay, that's interesting. But I don't know. For me, I really like the bootstrapping approach. And then the other thing we try to do is productized services, right? So instead of like a cut, let's say if you have a marketing agency very custom, well, no, let's try to simplify and have a package. That's kind of the approach as well.
Interesting. And yeah, I mean, here we are talking so much about like every business is unique, every person's unique, every approach needs to be unique and adjust. But like to just say one piece about that is like I know that allure of like, well, what do you do as a successful entrepreneur? You raise and you build. And like that is, that's absolutely kind of that's the approach that you kinda understand, especially as you're getting started in entrepreneurship is like, "Okay, I need to go raise money now," and as it's been so interesting, I've said this a lot of times on the show, but it's so interesting, from the outside looking into entrepreneurship, it feels like that stamp of honor is on like what was your series A, like how much did you raise, how many investors did you get on your first cap table, like what those are kind of the stamps of honor. And the more I get involved, the more I'm on this show and I'm talking with entrepreneurs, the more I really feel, and every business is different, some businesses the only way you can build is to go raise, and that's the good thing, that's what you need to be doing. But I feel like more often than not, for most companies, it feels like entrepreneurs in entrepreneurship say like that stamp of approval is like, can you bootstrap this thing? Can you do it without money? Can you keep 100% of your company? I can tell you how many people that I've talked to who, even the investors where I'm like, well, I have managed to be able to keep 100%, control of my company. And they'll be like, oh, congratulations. And I'm like, was not my expectation coming in. It'd be like, oh, well, one day you'll really make it and go raise some money. And different businesses are different, but I understand that pull of like, I thought I was supposed to go, that's how I was supposed to build a business. But if you can cash flow, it feels like that people that understand the game and have done it before really, really value that, see the value of that.
So true, man. There's a friend of mine, his business about 60 million a year revenue, 12 million in profit, so a
Wow.
million profit per month. It's like crazy, right?
hmm
So, yeah, wild.
Yeah. And he did that bootstrapped.
Hmm.
Wow, that's amazing. That's so amazing. I mean, that honestly, we all know that like the power is in ownership. Like you can build something extremely profitable and come out eking by as if you just held a 9 to 5 and had like all of the foundation and solid and predictability of that. But in true ownership is truly where you can create wealth and opportunity and yeah, there's a lot of power in that. Anyways, not to belabor that point, as you have grown these businesses, specifically brought people in, such a key question to me is like, how do you foster, maintain, protect the initial vision, mission that you have for the company, vision that you have for your growth and what you do and who you serve? How do you keep that stuff intact as you bring more people on and scale the business?
I think there's two sides of that. One is going to go back to the EOS that I mentioned because you're gonna have your strategy, which defines the long term vision, that 10-year, 3-year, 1-year plan. Everyone's aligned there, and your core values. And then the people side of things is basically, I like to define autonomy or dominance from 1 to 10 for simplicity. And 1, 2, or 3 would be someone very low autonomy. That someone that wants to do the same job for 50 years. That's okay. Everybody's different, but that's what they like. They like stability, for example. And then you have 8, 9, or 10s would be the crazy entrepreneurs, right? And that's okay. But we try to avoid, unless you get to like, I don't know, $100 million or something huge a year revenue. You need those crazy entrepreneurs as well in that business. I believe 10 to 100, if you will. But 4, 5, 6, 7 is what I call enough initiative, enough autonomy, which is someone that
Hmm.
is good, brings idea, push you back, but they don't want to recreate the
Yeah.
business
Yeah.
totally. So they follow the vision, they
Yeah.
add to that vision. So that's been the sweet spot for us.
Yeah, that's really good. That is a tough balance. And like, yeah, it's tricky. And I think a lot of entrepreneurs end up quitting their jobs and starting actually going and doing it, taking the leap because they figure that out about themselves. They're like, all I want to do is recreate everything in this business. And that is so frustrating to me because I don't have the autonomy to do that. And it's like, okay, you may just need to go build your own freaking thing where you can actually have the control. And then there are other people who that as a business owner who you absolutely look for is like, I want you to be bold, I want you to be creative, I want you to be scrappy like an entrepreneur, but I need you to follow my lead, understand and buy into the vision and build this with me, not over me or on top of me, right? And that's really tricky. That balance is tricky.
You know what's funny? When I started with this methodology 2.5 years ago, there was 3 other people with the exact same profile as me. And you think, oh, you're like, I want everybody like me. No, no, you don't want
No, you
that.
don't.
And man, it was so mentally expensive because if I
Hmm.
wanted one thing implemented in the business, I would have to spend 2 hours on the phone explaining and selling that idea to that person that want to do what they want to do. So yeah,
Hmm.
it's a little different than we think. I want everybody like me. No, you don't.
I know you don't. You definitely don't, especially as the owner and entrepreneur. I think that as I was, in my role at Disney, that was really my only professional role, full time outside of doing my own thing. And as I was there, I knew I was not cut totally from that cloth, so I was constantly pushing up against that and frustrated by like, why can't I have more autonomy? Why can't I build more myself and give more of my creative direction and input, but like was still had to fit within that and figured out how to do that. Now that I've gone and built my own thing, I keep saying like, I'm broken. Like you broke me. Like I don't think I can be an employee again because you taste that and you understand like, oh, this is what it looks like to have total autonomy. And it would be tough to go back and fit into that. But there are people who thrive on that. Give me the autonomy to be creative, but give me the structure to follow. And those are the people that I can imagine would be really helpful to find. And to your point of like all these different things that you're mentioning, this culture index, these other things to say like to give some actual data and some actual like a scientific approach to how do I find those people.
Yeah, that's
Yep.
that's pretty much it. Yeah.
That's awesome. Okay, so tell me a little bit about. We've talked a lot about people. You have scaled several of these companies to have multiple people with teams of 5. I think you mentioned 7 or 10 or more people. What is some advice that you have for founders who have hit that point? We talked a little bit about that moment of okay, is the right time to hire? They've crossed that threshold and said yes, it is. What is some input you have to say? All right, well, here's what I've learned. Here's the advice I'd give for that moment of now you need to go hire. How do you do that well?
I thought, at least to this point, again, I reserve the right to get smarter, right? There's this quote, I reserve the right to get smarter. So
I've
I would,
never heard that. That's really good.
it's a good one, right?
Yeah.
To this point, because in the past, I used to think, well, there's this magic around interviews, right? You get really, really good on interview and you can read people. Look, I believe to this point that everyone can bullshit their way through the interview. So that's again goes back to this understanding their brains on these assessments. So for me, when we are hiring, 78% is how people are wired. Is someone more detail oriented? Is someone more social, more reserved? Salespeople, you need more social. Accountants, you need more reserved. Leaders, you want a little more autonomy, and they don't have the problem with conflict because they need to resolve conflict often. And the operations people, highly detailed, they like structures and processes, etc. So yeah, that's how we've done on the personality side. 80% is 70 to 80% is personality and cognitive assessment as well. There's a 75% correlation. There's so much research on this. So I said 75. No, I mean 25% correlation on the explanation of job success is to
Hmm.
cognitive results. So if
Oh,
someone's going to be successful, yeah, a
that's higher
quarter
than I
of
would have
that,
guessed. Yeah.
it's a lot. And then
Hmm.
the next one after that is what they call structured interviews, which are basically interviews that 5 or 10 questions that you ask everybody the same questions and you grade them on every answer. That's very structured. And that's 50%, about 50% of the job performance kind of explain. That's pretty much it. Like, don't, in my experience, don't try to become the best interviewer ever. I have this list of about 50 interview questions. They're good, but it's not my cup of tea, if you will. Now, again, everybody's different. I'm more data driven. I'm more introvert
Mm-hmm.
reserved. Some people that are more social, they are more intuitive. So I
Sure.
do believe there's some
You
social
can
people
trust
that
that a little bit more. Hmm.
can be more intuitive on the, I don't know if I like this person. However, be careful. In my experience, don't hire based on the vibes, hire
Yeah.
based on the data is my take. There's that movie Moneyball. I don't know if you watched that one or
Uh-huh.
not, from Brad Pitt. You know, they have the statistician and they hired this guy that throws the ball weird, but statistically he was the right person at a deep discount. That that's really our approach, is the right person, and if they're undervalued in the market for whatever, we pay what they're asking. And that's how we're hiring. When someone apply, we're like, how much are you asking for? And we never, I don't like to negotiate people down. We don't do that. That's a tip, because, 6 months later, 3 months later, they're going to change jobs because they want X. So we don't bring people down. Now, if someone's too high, we're like, okay, yeah, you want that? I cannot offer that. But yeah, that's being the approach. Also linked to the E-Myth, that book, where he talks about the McDonald's model, where Michael Gerber, where you know you, if you're a high schooler, you can work for McDonald's there on the store, right? Or flipping hamburgers, because they have good processes. But again, when you're hiring someone out of high school or whatever, your pool of talent is so big and the cost is low. So it's an interesting model. And to a degree, that's kind of, we try to apply that philosophy if we can.
Interesting. Cool. I love your balance of intuition and data. And like, what do you are the is the data informing the vibes? Is the vibe informing the data, and like how to manage that well? And to, again, I just keep going back to this, but to your approach of like, you need to know who you are, how the skills you bring to the table. And if you're more intuitive, like maybe lean heavily on that. If not, then lean heavier on the data. And I think that's a really good approach, is being flexible. I love your quote, observe the right to get smarter. I think that's so good. And honestly falls into a lot of kind of what you shared in your approach. I think it's really aligned. What's a failure, Marcio, that you can identify that still stings? Something that just, yeah, you left money on the table, you lost a big whale, lost a big client, something. What's something that still stings? What'd you learn from it?
I had used the advice of a lawyer. I was hiring someone out of Brazil. The lawyer told me to lock up long time contract with an independent contractor, which is kind of weird, like a 1 year contract, super
Mm.
weird. Anyways, to fire that person, he was very expensive actually, and to fire cost me $30,000 just for me to get out of that contract.
Ooh,
So yeah, like over if I mean, heck, if you sum up all the mistakes and lessons
yeah,
learned and whatever, we
right.
are over like 500K in
Yeah,
mistakes. But
easy.
that's
Yeah.
that's that's yeah, that's a big one there.
Yeah, yeah, that makes sense. All right, you mentioned one thing that you always share with other entrepreneurs, something that really changed your perspective as you started networking and getting involved with others. But let's talk about anything else you can kind of think through that you usually bring up when you talk with other founders, other entrepreneurs. What's advice you give? What's a caution you give, or guidance when you speak with other people who are looking to start their own company or running one?
Besides EOS and personality profiles, the third thing that comes to my mind that I like is well, it's a monthly assessment with the team. Especially, it could be an in-person team, but in-person is a little easy to see how everybody's doing. But I still believe it's helpful there. But for remote teams like mine, once a month we ask about 20 questions. Some of them you have to write, but most of them are 1 to 5 things like, how are you motivated? 1 to 5, 1 to 5. You think like that people are gonna lie, and I believe my guess, it's about 80% accurate. So it's good enough information.
Mm,
So are you happy with our pay? I don't know any other company that asks the team every month, are you happy with our pay? The
hmm,
reason we do that is because if someone is a high performer and they're unhappy, we need to make a business decision. Are we going to
yeah.
increase their pay? And
Yeah,
you'd
it's not
think,
like they
well,
don't feel that way. If you're not asking the question, it's not like they don't have those feelings. You're just checking in on it. Yeah.
exactly, making very explicit questionnaire. And you'd think, well, people are going to game the system. Again, it's less than 5% of the time someone's trying to game that system. And if someone's trying to game and you realize, okay, that's their own person. And then we're asking, how likely are you to refer our company to someone else? That gives you an idea of if they're liking the job or not. Again, you'd think people would lie, and I think it's again 80 or 90% accurate. But it's what I call early. cancer detection system to the culture of the company. Man, when there's something going weird on the company, you can pick that up. And then what we do, we have conversations with people. Hey, I saw you're not very happy over here. I saw that you don't see how you can grow in the company. What about this? Did you know we can do X, Y, and Z, whatever? Blah, blah, blah. So it's super powerful.
Yeah, that really is. What's a question that you feel like other entrepreneurs usually ask you when they hear, oh, you're running your own company or you've started a business? What do you find people are asking?
I think recently people ask, how do you leverage your overseas team? How can you do that?
Hmm.
How can you trust someone that's not in your office? That kind of situation. And then my 2 cents on that is that you're gonna get your time back, meaning you're gonna get freedom. We become entrepreneurs to have freedom. You're gonna get freedom to the degree that you can trust people. So if you don't trust anybody, you're gonna be doing everything forever, not only on operationally, but also things like my car insurance, whatever was the insurance company was leaving the Florida state, whatever, and we needed another insurance. Well, my assistant went there and looked up for me, had my personal information, bunch of details, and that's it. So yeah, if you want freedom, you have to trust people, and that's pretty much it.
Yeah, that's great. Couple of closing questions here for you. Imagine you woke up at the start of your career, right there at the beginning, but you somehow were able to retain all the knowledge you've gained over your career. You can keep all that, all the $500,000 worth of mistakes, all the other millions of profit. Hopefully, you can take all that and what you've learned, and bring it back to that version of yourself that's just starting out. What do you do in that first week of that fresh start? How do you get started with all the knowledge that you have now?
I will assume that I have a little bit of money, not zero money. Zero can change the answer, but if I have a little bit of money, first thing I hire someone else, an admin person, to be my right hand person. Gonna do all the stuff that I don't want to do. You're gonna do the invoice. You're gonna do this. You're gonna add my video here. You're gonna post on social media. Blah blah blah. So I can focus on sales. I'm gonna ask that person as well to do the outreach. Hey, because when I was doing that myself 6 years ago, the outreach was so sporadic, like was on and off. Once 2 days a month because I hated it. And having someone doing that, oh, there's someone wants to meet with us. Oh, great! I'm gonna do that sales call. So that's the first one. And again, I'll do weekly calls with that person on the with the right agenda, with the right system, just that structure, having weekly metrics, all that. So that's how I would do from day one again.
Cool. That's awesome. Lastly, what's kind of one, you mentioned a couple already, but let's go through another one, a tool or quote or book, something that you found indispensable to you in your life, either personally or professionally.
I'll say something that a lot of people get drawn, which is emails, right? I'd say there's an email called Spark Mail.
Mhm.
I think you pay like $7 a month or something, and it there's a function there called Gatekeeper where you can block. So when you unsubscribe to something, and they keep sending you email from different names or whatever. Man, you can block that email specifically, or the whole domain, or even Amazon is sending you a receipt, like receipt
Right.
at Amazon.com. There's not even an unsubscribe option there because it's a receipt thing.
Right.
And I block. So my inbox is super clean, but because of that function and of course my system, but that's a big one.
Nice. I'm a Spark user. I love Spark, and for a
Ah,
lot of those
nice.
reasons, yeah, they're good stuff. Awesome, Marcia. This was super valuable. Thank you for taking the time. I loved. I mean, as we went through, I told you a lot of what I was loving as you talked about it, but so much of this resonated with me. I think provides a unique and fresh perspective for my listeners. So thank you, man, for taking the time and walking us through that.
Thank you, Brandon. Good talking to you, man. Appreciate you.
Awesome. All right. Thanks. You take care. If you guys enjoyed the show, leaving a review is the best way to help others find it, second only to sharing it directly with your friends and family. Thanks so much for helping get the word out. Hit me up at brandon@readysetstartuppod.com if you have additional questions about a topic I covered, have suggestions about another area you'd like to see me dig into, or just want to say hi. Please reach out. I'd love to get in touch. Keep imagining, keep creating, keep inspiring your spheres of influence with what you're passionate about. The world may just need that dream that's in your head. See you next time.
resonate.